Hey, welcome to the live stream. Let's see what the market's doing today and see if there's any opportunities to get into some stocks. To evaluate stocks and look at their fundamentals. Sometimes stocks are popular, but I want to make sure they're valuable. But I want to make sure they're valuable. If you look at the best companies on the stock market, the most valuable ones, they all produce high free cash flow. High free cash flow. That's why I'm looking for high free cash flow. All the best investors depended on free cash flow and evaluating a company's ability to generate free cash flow. A company is not the stock price, and the stock price is not the company. They're two different things. Two different things. The big cap stocks have taken the show, but are big cap stocks going to come back? Chinese stocks are exploding. The dragon has awakened in China. It could be the best trade we've seen in a while. AI hype is really interesting. AI is going to be interesting in the future, but is it really a business today? I'm going to pass on this stock. Just not enough discount, and I'm not really believing that they're going to grow as well as they should. Options can make your performance go a little higher every month and generate nice income. Listen to the great super investors. They are pretty generous with their knowledge and their wisdom. You just got to read their books and listen to their videos. Learn something new every month. In investing, you'll become a great investor. You'll build wealth. This is a buy stock. You're looking at a discounted stock, and it's unappreciated at this time. Don't forget about bonds. Bonds are a smooth, consistent way of earning a good return. And when stocks are really crashing, bonds stand up tall. Bonds stand up tall. You got to ring the cash register and take a gain. Defining when to sell a stock is a lot harder than determining when to buy a stock. And over time, you'll become a great investor and you will build great wealth. Hey everybody, welcome to the live stream. Thanks for joining a little early for those that are on. It's good to see some friendly names here. Sergio, thanks for tuning in a little early. Omar, thanks for tuning in. And I do own a little bit. I own some stocks that operate down in South America. New Holdings is one of them. Mercado Libre is another. I don't own a lot because I'm here in the U.S. and I don't have a lot of knowledge of South America, but thought I'd say that. Android PC, what's up, man? Shadow Guy, what's up? Good morning. Interesting. We'll take a look at Novartis. And thanks for joining. So today's a huge day, man. It's going to be driven by Nvidia, and then kind of forgotten is Salesforce CRM, which is a pretty big stock. I'd like to take a look at Salesforce on our stream this morning, as well as Nvidia. Can't get away with not covering Nvidia today. And all right, you'll be driving to Zurich, Shadow Guy. Have a good drive. Rotel and Cheese, good to see you. So you want to look at VITL. Let's take a look. Okay, cool. And then Mike, the dividend investor guy. How are you, sir? Good to see you on the stream. And stock futures are up. It's nice to have a green day. So you want to look at NICE and Lam Research. Glad to do it. Thanks for joining. So the market is showing a little green, and that's encouraging, but let's not be overly surprised if these numbers turn red. We are in a market, and this is the fear and greed index. And, I don't agree with this 100%, but I think it's somewhat accurate. If you look at each component of it, it tends to kind of measure where sentiment's at, and it moved to extreme fear, which is, if anything, just interesting to look at. And I think I'm agreeing with it that if you are a stockholder in, let's say, Microsoft, and you're like, Microsoft is a solid business, no one's going to argue that, just a very good business. And you're seeing it down 5.6% year to date. It's like, man, if I can fly to quality like Microsoft or Google and I'm losing money, I am stricken with a little fear. I mean, where do I go, right? So I could agree with that sentiment, as well as some stocks are just getting shellacked, right? Speaking of my own stocks, Robinhood getting, priced down. Probably some of that's deserved. Palantir's sold off. I'm going to look at Super Microcomputer and kind of look at that, dumpster fire and a couple of others. But that type of action really just, really gets in the minds of people, especially, investors that want a quick buck, like, hey, I'm going to invest in this stock and double my money in 6 months. Now, if that's your investment thesis, I think you're going to lose a lot of money, and there will be days when you're stricken with fear because it's just too risky. You should be in fear if you're risking too much. Now, if you have some risk out there, you invest in some really interesting businesses that have a bright potential future, great. But then invest in stuff that's going to, preserve your wealth, preserve your money. And that's called diversification. It's called reducing your risk, not betting all your chips on one particular stock. And so, yeah, I can understand fear goes alongside, I think, corrections and market crashes. And what's good about fear is that it causes people to abandon some of these stories that have been really bought into, and the AI story. I think AI is real, but when is it going to arrive? I was hearing a story earlier today of Amazon investing big into Alexa, and they are frustrated that people don't use Alexa the way they intended, or the company intended for people to use it. They're using it for really simple tasks, and they'd like it to do far more things. So they're betting big on trying to make that work. But my point being is there's no really strong usage of AI just yet. Someday, maybe, but not this year, not next year, maybe in 5 years, maybe in 10 years. Well, as investors, we don't, to use an analogy, we don't, sell shares in a company or buy shares in a company that says, hey, we're going to have the best pizza shop in the history of mankind in 10 years. We're like, no, if you're going to have it in 10 years, I'll invest in 10 years. I don't want to invest in a pizza shop that's going to deliver pizzas in 10 years. Well, AI is pretty much getting away with that, which is, hey, we're going to deliver AI at some point. We don't know when, but it's going to be great. Well, cool. Give me a call when you're like, when you got something to show me that's real. So those stories are getting old. The data center build out is beginning to lose some of the, support for that story. Big players like our friends at Microsoft, they're saying, hey, we were bragging a couple months ago of how much money we were going to spend. It seemed like these big players that have big cloud businesses, Microsoft, Amazon, Google, Meta, even X, they were just boasting, man, we're going to spend so much money. Well, Microsoft started to message a change in that strategy, which is, hey, we're going to start leasing. That's code for we don't want to spend capex. The market has told us that if you spend a lot of capex, we're going to sell your stock off because you've become riskier. If that bet doesn't pay off, if nobody wants your, accelerated high performance computing to build large language models and you're stuck with all this capital and that capital underperforms, we don't want to be around for that. And Microsoft got the message and they're like, you know what? We're not going to build our data centers as big as we said we were going to build them 3 months ago. We are going to lease. We're going to be more flexible in our strategy. That's wise because I sold my Microsoft shares when I looked at their statement of cash flows and I saw how much more capex they were spending. And I'm like, I'm out. I sold all my shares. And I think it was a good move. Strategically, now Microsoft is kind of going to clean up their act. So I might get back into Microsoft. It wasn't a big position that I got out of. It was like $15,000, got out. I own a lot more of Amazon and Google. I own a lot of Google. So Google needs to get the message and stop spending so much freaking capex that is directly in line with AI and data center because other businesses are abandoning that whole, hey, let's bet the whole business on AI strategy. Not wise. So we'll see where that story ends. The company that had been benefiting hugely by selling the technology to build AI has been Nvidia. And their earnings this afternoon, needless to say, will be the most viewed, reviewed, analyzed, discussed earnings of the season. It's going to eclipse all the ones we've seen to this point. I'm going to basically be on call. I'm going to read their earnings announcement from first word to last. I'm going to look at each schedule. I'm going to see what I'm looking at. I'm going to analyze the company and I'm going to try to really focus on growth, sequential growth, because we can't look at overall growth because it tends to, it gives you a good picture generally, but Nvidia is a different animal, which is we really have to see the most recent quarter and what is it telling us about the next couple of quarters. We have to read into that. So I'll try to do that and give you my opinion on Nvidia. Overall, I think Nvidia is an awesome business, but awesome businesses are worth 500 billion. Awesome businesses are worth 200 billion. But when you have a business that's being valued at 3.1 trillion, it might be an awesome business, but it's priced, 50% too high. I don't know. And my analysis says that they're priced too high. And I've been saying that for 8-9 months. So big day today. And the other thing, mentality, right, is investing is like, I played sports and, in my younger days. And now I love investing because it's kind of replaced some of that, ability to participate in something that's difficult, something that I have to work at really hard to get good at, and something that's very gratifying and financially rewarding in the case of investing. That's why I invest. I love investing. I love analyzing companies. But like sports, where maybe you name the sport, right? I'll pick football since we just had the Super Bowl. You're going into the fourth quarter and you are playing on the field. You're playing maybe high school football or whatever, college football, and you're going into the fourth quarter and you're down. Well, you don't really focus on fear. You focus on what plays is the coach calling or the offensive coordinator calling. How do I do my job? How do I execute what I'm supposed to do. That's what we should do as investors. This is a good time to be an investor. The best times to invest in stocks is when everyone's afraid. And I don't think everyone's afraid just yet. If we get into extreme fear and stay there for 6 months, toward the end of that 6 months, we'll be able to buy great businesses at a great price. It'll be awesome. So whatever, you've done in your life, whether you played football or whatever sport you played, or maybe you educated yourself and had a discipline in sciences, or you're a performing arts person and you had to really get ready for a performance. You don't think of the fear. You think of, what am I supposed to be doing? I've been working at this discipline for a long time, and I'm supposed to do these things to manufacture success. That's what we ought to be doing. We ought to be manufacturing success. In my investing philosophy, I want great businesses that are going to be growing, that have a lot of power in their industry, that are part of industries that I really like, that generate free cash flows, are going to grow those free cash flows, that generate profits, are going to grow those profits. And I want to buy them at a discount. I can identify great companies that are overpriced. That's not for me. I want my cake and I want to eat it too. I want a great business and I want a great price. And if we continue to go down this road of fear, I'm going to be given a giant present, which is maybe Google's stock gets sold off another 25%. Thank you, stock market. Thank you very much. I'll buy more Google shares. Or maybe, our friends at Microsoft will go down another 30%. Great. Thanks, stock market. I will take that discount. Thank you very much. And I can go on and on. So analyzing businesses and understanding, hey, is the marketplace beginning to discount based on fear, right? Are people beginning to run out of the stock market because they're like, well, we're not sure. The stock market's dropping, so I don't want to invest. Okay, perfect. Leave it to the people who are ready to really follow a process and a plan to take advantage of falling stock prices. So this is a time, let's just keep reminding ourselves that, hey, this is the time we can make a lot of money. But it's not a short-term game, right? It's not like we're going to make a lot of money this week. On Friday, you'll be able to buy a Lamborghini. Yeah, this isn't my channel. But I can assure you that if you invest right, you'll grow great wealth. You will continue to grow great wealth. You will establish a skill set where you will make money year after year and have great returns. You'll outperform what you would have done if you were a passive investor, or obviously just a savings account investor. So a couple of things to open up with. And, the NASDAQ for year to date, don't look now, but the NASDAQ is in the negative year to date. Oh, man. And no big surprise. And it's been going sideways for the year, right? The year being, we're coming up on 2 months, right? At the end of Friday will be two months in the books. So not getting off to a great start. And more recently, it's been a kind of a steep decline. We're talking about 4 trading days, or maybe 5, and we're down 5%. So it's a pretty steep sell-off. It's like, and I think it's because a lot of those mega caps are selling off, and they have a big impact on the NASDAQ and the S&P. So the S&P year to date is up a little bit, 1.25. That's doing well. And the Dow up 2.5. So the old school companies are doing a little better than the new school companies that are really high growers. One thing that I wanted to point out is the one company that's been getting it done, a couple companies, is Berkshire Hathaway. That's Warren Buffett's company. And They're up 10% year to date, and they have a ton of cash ready to deploy, ready to buy, new companies should they fall. Eli Lilly in healthcare. Healthcare has been doing well. Walmart, because Walmart's a staple. So like, hey, if we get into a recession, people will shop at Walmart. Totally. I get that. And we got Visa's up and Costco's up, another consumer staple. So the usual suspects when the economy goes bad are doing well. When we look at sectors, right? Not all sectors are feeling the pain. Healthcare is really beginning to work this year. I'm glad to see. I think they've been left behind for a couple of years, and healthcare stocks are working. I've been really putting a lot of time and energy. I've created videos on my channel. You can take a look at them, and I express my logic on why I think healthcare is going to do really well. And my healthcare stocks are doing well. I'm buying into healthcare, buying a number of healthcare stocks because I think it's going to continue. There's a lot of reasons why I think healthcare is going to do well. Materials, I don't have a lot of knowledge and skill and experience to qualify myself as a materials investor, but man, it's doing fairly well this year. And then staples are there. When staples are doing well, the rest of the market is nervous because they're like, wait a second. That means investors are moving to safety. They're moving to stocks that are not as risky as high growth, technology stocks. They're like, a PE of 200 is too high. Let me move to a PE of 12. And they go to a consumer staple that maybe pays a dividend, and they're happy. They're going to wait this thing out without completely abandoning the stock market. I personally don't like staples. I'd rather go into bonds. Bonds are clear. Like, hey, I'm going to get my 5% and preserve that wealth. Okay, cool. Financials have come down quite a bit. Utilities are there and so forth. So I wanted to call that out. Looking at the heat map, and I see we are 22 strong. I see the comments coming in. Please give me a few minutes to get caught up. I appreciate you joining, and I'll be with you in 1 minute. So the heat map. Now this guy, when we open in about 10 minutes, we'll take a look at this later on and see where things are coming in. This player, Nvidia, this is, it's going to be really interesting to see their earnings, but it'll also be interesting how Nvidia stock behaves leading up to the market close. Are investors going to be fearful and sell it off and kind of not take the chance of hearing that Nvidia expects a slowdown and then stock sells off by 20%? That is possible. It could sell 20-30% off in one day, or it could rise. I don't think it would rise by 20%. It might rise if they have good news by 5%, maybe 10. But I think the impact is going to be substantial leading up to the close. My best bet is that I think fear will win the day. And I think Nvidia stockholders will sell more than buy. And I think the stock should sell off today. That's my best guess. I could be wrong. We'll see. Give it 6-7 hours, and then we'll see how right or wrong I was. But we'll see how all the other things, behave. We're on a pretty jagged kind of sell-off. And we tend to see when we have these sell-offs, you tend to have, and this is, let's look at the 1 year. You have sell-offs with rallies, kind of like, the stock still, or I should say the market continues to sell off, but you have some rallies kind of mixed into that downturn. And we haven't seen one. So I could totally see that we have a rally for a day here or there. But we'll see where the market finds a bottom. And, right now I'm not seeing a catalyst that's like, yeah, that catalyst can really make investors excited and the stock market can rise. I'm not seeing that there's one out there. I'm seeing that, certain news stories that are coming out are kind of bad. I think we had economic data that showed that the economy is slowing down. People are more nervous. All the jobs that are being lost are getting in people's psyches. So those things I think are having an impact. So we will see. We will see if the market keeps these green numbers or if it's a head fake. Hey, we're going to open up higher, but quickly, maybe an hour or 2 hours into trading, these numbers turn red. I would not be surprised if we end up there. All right. So earnings for today. Of course, we have Nvidia and Salesforce. I'm really focused on Salesforce. I'm very optimistic on Salesforce. I think it's a discounted stock, and I'm beginning to buy into it. I think they're going to be a big beneficiary of the next 2 years. So that's a good stock. We had other stocks come out like TJX and how are they trading? We'll take a look at that. Lowe's and Home Depot traded up because they're kind of safety stocks. They're not doing all that great. Like Lowe's, their revenue went down, but their stock's trading up because people feel safe if they buy into Lowe's or Home Depot. And then, of course, beverage. That had an announcement before the market opened. Oil companies, Synopsys. And, let me take a look at that company. Synopsys is in the semiconductor ecosystem. I'd like to look at that. So we'll look at it later. Snowflake. I saw it. I glanced at the comments and somebody said Snowflake announced. So we'll take a look at that later. Stellantis, and then eBay. eBay has been a good performer, but I don't believe in their business. I don't think their business is all that great. But we'll take a peek. All right, so let me catch up on comments. Thanks so much for joining. Tomas, how are you, sir? Good to see you. Let's see here. Where did I leave off? Okay. So Mike, the dividend investor guy, I've got your stocks noted. We will cover those. And we've got Sergio. I do not like Confluent. I went through their numbers and I think their business is interesting, but I think they're not as valuable as I thought at first glance. And I did a video on it, so you can take a look at it. Snow, Android PC. We'll take a look at Snow. I am familiar with their business. Take a look at them. They are kind of a one-trick pony that came out with a lot of hype, and now they're having to like really execute. So we'll see if they're executing, if they deserve the valuation they have. Nichix, defensive stocks like Pepsi, Walmart, Costco are going up with this correction. Are you buying? I'm not buying Pepsi, Walmart, or Costco. That's just not my game. I'd rather wait. See, here's the thing is, and everybody gets to invest the way they want to invest, right? But rather than buying a safe stock for me, I'd rather like to see, what's one of my favorite stocks that I love is, let's say Robinhood, right? I really like Robinhood and I like their strategy. It sells off by 50% from this point. Now that is painful. It's not fun to see your portfolio look the way it's going to look. I'm going to buy shares. Thank you very much, stock market. Or my beloved Meta. Meta is great stock. I don't think it's going to fall 25%. But hey, stock market decides I'm going to sell it off by 25%. I own a lot of Meta, like 280 grand of Meta. I would buy Meta shares. And so rather than buying a safe stock, I'll keep my money in cash or bonds, earn 5%. I'm good to go. Because when I look at staples over the 5-year run, you're not making much over 5%. And in some cases, you lose money. You lose, the stock price depreciates, goes down, and the dividend doesn't rescue that depreciation. So rather than waiting it out in a safety stock, I'd rather wait it out in bonds and cash. Cash is paying like 4%. Hey, that's cool. That's cool. We're not in an era where cash was paying 0%. No, we're not in that era. So I would put money into cash. I've been building up cash. I've been covering that in my discussions with you guys for a while, and I'm going to continue to build some cash because if this thing continues to sell off, thank you very much, stock market, I will buy some stocks. So Android PC, we'll take a peek at Snow. Omar, will you be buying Nvidia? Hold long. I am shorting Nvidia. I have bought a put. It expires January of 2026. I am in the money on that put. And if the stock price goes down probably to $90 a share, I'll probably get out of that put and make a good profit. I think this Nvidia stock can get down to $80 a share in the next 12 months. And I don't know that it can go up much higher than where it's at now. Maybe it can go up 10%, but we'll see. I'll go over Nvidia in a little while. Your buy price, see, I knew I liked you, Mike. Your buy price on Nvidia is $65. I will buy Nvidia shares at $65. Actually, I'm going to do you one better, Mike. I will buy at $66 a share. I'm a little more optimistic. But yeah, I agree with you that, hey, Nvidia is a great business, but it's just overpriced. That's all. It's just overpriced. Buenos dias, Tomas. Very good to see you. New Holdings. You know, New Holdings, the one thing I would say is they had earnings. The stock price dropped like close to 20%, but the stock recovered the following trading session, and then it did well yesterday. That's very, very good sign. It means that investors came in. They're recognizing, hey, that's a good business. Yeah, they had some, currency exchange affect their earnings, but their execution was very good. So that's where we're at. And then you brought up Globant. I don't know that I've ever covered Globant. Take a look. And Nichix, Globe no es tan bueno. New, so you like new more than Globant. Okay, cool. Android PC, you're buying New Holdings. I'm buying New Holdings. Everybody's buying New Holdings. I like New Holdings. I like what they're doing. So, turquoise yoga pose. All right, cool. All right. Hey, what's up, DevQ? I don't know if you've ever posted. I appreciate you joining. Good to see your name up there. And then Android PC, Nicolas, thanks for joining. All right. Everybody should join the PAGS team. Let's take a look at PAGS, man. That's been a winner. All right. Omar, StoneCo. Man, StoneCo for a while, man. That stock was rocking. What's it been doing? PAG Seguro has been rocking. DevQ, what do you think of Symbotic? I don't know that I've ever looked at Symbotic, but we can take a peek. Bear with me. So far we've got 16 stocks on the board, so be a little patient. I'll get to it. So Confluent, I didn't do yeah, okay. So I think I posted on X as well as on the channel. I posted just my conclusion, and I put out like my valuation. My valuation, it was nowhere near its stock price. It just doesn't generate enough cash and profit. Maybe in a year, maybe in 2 years, but they are in a market where they're competing against giants. They're not competing against like little players. So we'll leave it at that. Yeah, I wish Meta goes down as well, because it went down in 2022, and I made a lot of money buying shares of Meta at that time. So Intuit, very high quality business. Just every time I look at that business, it's just priced so damn high. And they don't grow a ton. They're growing 13%. I can find other businesses that are growing at that rate that are discounted, like Adobe. So I like Adobe over Intuit. Bearlight. Well, see, here's the thing about other countries buying into AI. They now have an option, which is you can build our large language models and AI using less expensive techniques. The Chinese have proven that. So they're going to use open source models. Open source means you get to use it for free and avoid having to buy NVIDIA GPUs. Oh, okay. That's good for the market. It's good for people that want AI, but it's bad for NVIDIA. The chicks, you got some calls on NU. All right, cool. So caught up on comments. Thanks so much. We are 23 strong on the live stream. All right, so I'm going to start with nice software. I'm going to handle some of the requests, and then I'm going to hit NVIDIA and a couple of others that I did want to cover. I wanted to cover First Solar. I was really impressed with what I'm seeing, and I wanted to show it to you. I did a video, a short, but I could go a little deeper on the live stream, late in the live stream. I'll wait till late in the live stream after I handle some of the stocks that you guys want to look at. So let's go into nice software. So here's the story on Nice. Nice has been selling off. Nice is a software company. They develop software that goes into call centers. So when you're calling in for customer service or something, the person that's helping you is using software. That's the kind of software these guys create, as well as, other aspects of marketing and so forth. So that software tends to be, obviously businesses need it. And it was deemed that AI is going to really replace that whole model. I would say that it's partially true. And I would say 40 years from now, yeah, I would be surprised if we didn't have AI chatbots completely doing that process, because by that time it would be so good that why wouldn't you? But now I think it's not that great. People need answers on a product, and they still need the software. Now, it's been selling off just really terribly, and for the 5-year, it hasn't been doing anything. But why do I like this company, right? It's a tiny market cap. But when you look at their revenue, it's growing. We just saw Intuit. Intuit's growing at 13%. Software company. Nice is a software company growing at 15%. Whoa. Okay. Looking at the quarterly, 15.79. I like the revenue growth. Revenue says more customers are coming and buying their product. The existing customers are buying more of the product. They're raising prices. All those things are very good attributes behind the company. And we have a company that generates really good free cash flow. It's been growing. I like companies that give me nice accelerating or increasing cash flows. I'm confident these guys are going to keep cranking out cash because they are showing that, hey, as we get bigger and we get higher scale investor, we're going to give you more cash. All right. I like that. Gross margins, very good. Operating margins, very good. Profit margins, very good. Free cash flow margin, 29%. If I had a bank account that gave me 29% interest, I would put all my money in that bank. I'd be like, yeah, here's my money. You're going to give me 29%? Thank you. And it's been the case for a long time that these guys generate free cash. So I like all those things about them. Strong buy. Analysts like it. I do my own homework, my own analysis, and I think that nice software, because their cash flows are so valuable, combined with their earnings per share valuation, is discounted by 43%. I continue to buy shares into Nice. It has been selling off. This market is a little irrational. It's, kind of a little fear stricken. It's like, man, kind of scared, investors in general, kind of speaking for the investing community. um, the market's a little scared. We showed the other graphs right now. The market's trading up. It's 10 minutes into the trading session. So I think nice. We're going to wake up a year or 2 years from now, and this is going to say 20 billion market cap. I'm going to double my money on this puppy because there's just too much value here. When we look at their balance sheet, they have 1.62 billion of cash, 562 million of debt. So they have $1 billion of cash right there, $1 billion, and their market cap is less than 10 billion. So they have more than 10% of their market cap in cash, ready to go. Look at this forward PE. Who needs to buy staples? I don't need to buy no stinking consumer staple. I'd rather buy nice software at 12 PE, because when the market wakes up and says, oh, this AI thing isn't going to do all things and it's going to take a while. Meanwhile, NICE has been just growing their business, making their customers happy. And FYI, NICE does have an AI business. They're building chatbots, so they will have a revenue stream due to AI that they're taking advantage of. So I'm all in on, or I shouldn't say all in. I'm buying NICE software stocks, and I am happy to do so. The market wants to discount them. Thank you very much, stock market. I think I'm going to grow my wealth by buying NICE software, and I'd be happy to do so. All right, Lam Research is up 2.35% today. For the year to date, it's up 13.7%. This one's one that we came out of our investor workshops on weekends. We started kicking around some of these semiconductor material companies, Lam Research being one of them. The other one is ASML and a couple of others. This one I thought was the best one in the pack, so I started buying into them, and I'm doing well with it. So this stock, again, this is a discounted stock when I look at their intrinsic value. Forward P is not bad, 21%. They are growing. And what's interesting, I think, at the quarterly, see how their growth is really jumped up. They kind of hit a slow period, but boom, 3 quarters, bang, bang, bang. Okay, that's a good sign. That means, hey, they're getting more orders from their customers, and that's really, really adding up. And the market's recognizing that, hey, Lam Research is making some money, and they generate cash, free cash flow margin at 25%. Man, what's there not to like? Lam Research. I like companies that generate cash. And I think that the stock is not wildly discounted because it's been going up in price. It's 18% discount. But when we looked at it 2 months ago, it was discounted by like 36% or so. And it's just appreciated since then. So it's moving in the right direction. Lam Research is a good stock. Now, the market's not selling it off. So good. That's kind of good to have a couple stocks go up. Can't have all stocks go down. That'd be tough. Over the 1 year, see, one of the reasons why this was an opportunity is it sold off. Market was irrational about this one for a little while. And then it was great to buy it around here, right? Buy it in low 70s. See your stock price go up. Nice. Who doesn't like that? So Lam Research is looking good. This isn't going to be a quick multi-bagger, in my opinion, but it's just an obvious kind of winner. Look at their chart here. It's been going up over 5 years. So I like Lam Research. I think it's a well-known name, nice big market cap. And I'm not buying any shares right now. I got my position. I'm good. And I'll just kind of ride it out. So thanks for asking about that. Let's keep rolling. I think Shadow Guy brought up Novartis. Now, Novartis is in Europe. They do research, develop, manufacture, distribute pharmaceuticals in Switzerland and internationally. This is a big cap. And let me make sure I have the currency, US dollar. Yep. So 222 billion, big revenue, 51 billion. Today it's down a little bit. Year to date, it's working 11.7%. 1 year, not so much, but it had a pullback. Boy, it was pretty attractive to buy, right? Now this is like, looking at hindsight, right? Hindsight's 2020, or when you look at the rear view mirror on your car. Yeah, it was great if you would have bought it in December 31st at $97 a share, you'd be up nicely. But it does just show that, hey, it was really high, came back down, and now it's caught a nice little rally here. I think healthcare in general is discounted. And a lot of these companies are really good businesses. Look at this PE, 13.5. This is a quality business. They're growing at 10%. Man, what's there not to like? And look at quarterly. They're accelerating their growth. Man, it looks really good. I think there's a lot of choices in pharma where you have these discounted companies, and I think they're going to continue to do well for 2025 and 2026. Free cash flow is tremendous. This is a good stock. There's a good number of stocks that look great. Novartis is a buy in my book. Now, I can't buy all the pharmaceutical companies that I find that are discounted. I'm buying a couple. Novartis is not one of them. But, man, this is a good buy. If I didn't have Pfizer, if I didn't have Catalyst Pharma, if I didn't have United Therapeutics, this one right here would be on my list. And for now, I'm going to ride those out. I also have CVS and I have Elevance Health, and I'm buying into Oscar Health. So I've got my healthcare portfolio going. It's working. I'm buying more into it. And I just can't have like 100 companies in there. I've got a 6-pack of companies. I believe in them. I'm going to keep buying into those. And Novartis most definitely looks like a really good business. So good luck with that, shadow guy. Good luck with your drive. So Tomas brought up Globant. I've never heard of Globant. Did I write that? Globant? Okay, Globant, together with its subs, provides technology services worldwide. It provides digital solutions comprising of blockchain, cloud technology, cybersecurity, data, artificial intelligence. Okay. And these guys are located in Luxembourg. So they're a European company. Looks good. Let me look at their website just to kind of get some visuals. Okay, so these guys. So studio networks, products and platforms, global agents. Okay. All right. So these guys are up a tiny bit today. Year to date, they're down 27%. For the 1 year, they're down 31%. They are a technology company headquartered in Europe. Now, Europe brings a lot of intellect to the game, right? They have a lot of good businesses out there. One of my favorites is Spotify. Really, really good business. And that one's in Europe. Market cap, 6.75 billion. So it's super tiny cap, but look at that. Revenue is 2.42 billion. So you're only paying like 3 times revenue. That seems like a really good deal. Forward P is 22. All right. Analysts think it's a buy, discounted by 41%. They are growing nicely. That looks good. So they were producing free cash flow. When did they announce their earnings? So looks like they announced them recently, but they're not giving me the cash flow. Cash flow looks good. Gross margins, how come margins are so low? These guys might be more services than they are intellectual property. Like when you create a piece of software, you create it once and you sell it to 1 million customers and you're very profitable. When you provide services, you have to provide the services for every individual customer. So it's not as profitable, not as lucrative. So not as lucrative there. Okay. See how their profit is single digit. So it isn't as awesome as other businesses, and their free cash flow margin is 13. I'm not sure what it is for the trailing 12 months. So this one here, not as awesome as a software company, but let's keep looking here. So they have a little more debt than cash. They have net debt of 254 million. Not too bad. So this business is probably not interesting enough for me. I look at their free cash flow and maybe I can get to 5 billion, maybe stretch it to 6. And that's not giving me a giant discount, right? And this is a small cap. I need to see like, hey, I can double my money in the next 2 years potentially. The market's selling this off and you see this jagged drop. Man, what happened? So there's some concern there. And that's even after a big drop like that. I still think it's overpriced by a little bit based on their free cash flow generation. And they are not, I mean, their growth is good and it's a pretty good sized company. And this is US dollars. Okay. But their margins, that's where I'm like, I lost some of my interest when I'm seeing lower margins, lower profit. I'd rather find a really good, there's really good choices in software. Like I showed you, nice software. We're going to look at Snowflake, which is a software company. Its margins were more than double what a Globant is all about. And the market cap was it 10 billion or 12 billion? So revenue was higher. And the PE was lower. So if we're going to talk about technology and software, there's good choices out there, really good choices. The market is really expensive when it comes to like semiconductors and technology, anything around the data center. But some software stocks have just been really sold off, and there's a good opportunity out there. Globe is a sell in my book. It's not a stock that I would want to accumulate. But that is what I'm going to say about that. Let's talk about a winner chicken dinner. This one's been doing well. Look at that, 26%. PagSeguro, together with its subs, engages in the provision of financial and payment solutions for consumers, individuals, entrepreneurs, micro merchants, and small, medium-sized business companies in Brazil and internationally. So these guys are cleaning up. Market cap's only 2.42 billion, revenue of 3 billion. Really low PE. Wow. Part of why the stock's rising is that it was highly discounted. They are executing well on their business. They're growing. The last quarter looks good. Last 4 quarters look excellent. They're executing their business really, really, really well. And looking at, so last 12 months, cash flow is not good. And I think we covered this one, Tomas, and I had a couple concerns around their accounts receivable, I believe. Yeah. And this guy here, free cash flows previously, gross margins are around 48. That looks good. Profits double digit. They can get back to this. It's very important they get back to positive free cash. So I would say that. I think I saw that there was a little concern around their statement of cash flows showing that their accounts receivable balance just keeps being a negative line. To me, that means that they're writing off debt from customers. You can't do that forever. Your customers need to pay you. So, but the stock's been performing. I hope it continues to do so. And I hope they continue to get strong. PAGS is not a buy for me. It's kind of a pass. I can't argue with somebody buying it, especially if they believe in the future of PAGS. But for now, I'm going to stick to new holdings. So that is PagSeguro. So one stock that came up that is right here is Snowflake. So Snowflake came out with a lot of fanfare. Over the year to date, it's up 9%. Over the 1 year, it's down 26%. Over the 5 year, just 40%. But you can see when it IPO'd a couple years ago, I guess 4 years ago, it really had some peaks here. And then it really settled down. At its peak, it was a $392 stock. Now it's less than half of that. And that's typical with IPOs. You know, the IPO, they have a lot of attention. Investors buy into them and stock gets bid up. And then they start executing their business. And the investors are like, whoa, wait a second. You're this small? I'm selling the stock. But these guys, look at that, 30% growth. So they are, from a revenue standpoint for the quarter, they're almost $1 billion business for the quarter. And they're growing at 28%. That's impressive. That's very impressive. Okay. And we have free cash flow. Very impressive. They're already generating free cash flow. It's a young business. Margins are good, 67%. And these guys do a cloud service, and they give businesses the ability to bring data together and have a big data lakes and data warehouses and be able to analyze data. So you might have a business, a big one might have like 20 systems that all have important data. These guys make it a business of being able to bring all that data together, and then it gives that business better visibility. So that's something that's working for them. And I think the market is buying into it. And I should say the market, they're getting more customers to buy their solution. The customers that currently use their solution are buying more of it. They are making cash flow. Cash flow is looking good. So based on their cash flow rate and their growth rate and their industry, so that's trailing 12 months. This business would be worth 25 billion or so. And that's assuming they don't have any debt. So they have $2.45 billion of cash. So maybe they're worth about 27, 28 billion. And they're a $55 billion market cap. So they're priced too high for me. I can find other like companies that give me a better investing opportunity. Snowflake is a good business. It seems like they're on their way, but they just don't, they haven't grown into this stock price. And I'd rather buy a like nice software look better. I think Adobe is a better buy for me. DocuSign was a much better buy a year ago. It's still a better buy than Snowflake. So I have good choices here. I have like 8 software stocks right now, and there's plenty of choices in software as well as technology like these. And of course, like I own Alphabet, Google, and they provide competing products and solutions against Snowflake. Snowflake is more specific to one discipline, but it's something that Google Alphabet does provide. So that is Snow. I am a seller of Snow stock. I wouldn't be buying it. All right. So one stock that, let's take a look at the list here. So VITL. Vital Farms. Vital Farms provides pasture-raised products in the U.S. Eggs, okay. Yeah, eggs are become really valuable. This is a staple. Down 13%. Okay. 1 year. 1 year it's up 93%. Wow. So egg prices are really high. There was some type of bird flu that made the farmers destroy a lot of the herds they had, or the flocks, I guess. And these guys are growing really nicely. Growth looks great. Yeah, looks good. The growth looks good. Now, when will this end, right? Like, will egg prices go down at some point? So free cash flow looks good. Gross margins, it's a farmer, so it's not really high. Okay. Yeah. You could say that this business is fairly priced. I couldn't argue with somebody buying it, especially since it had a pullback. You know, you're having these pullbacks and it goes back up. The industry is not the industry for me. I don't want to be a owner of a business that's in consumer staples. This is going to have an up and down existence, right? You see how it's sold off over the 5 year. This has done okay, and it's caught a very good rally recently because we've had high egg prices due to these bird flus. But if you were sitting on the stock for 3 years, you'd be pretty disappointed, and you caught this rally. Over the 1 year, it's really gone up because of the dealings with the egg prices and so forth. It's probably going to make them profitable for 1 year, but I think the gains are already set in the stock, and I think there's a risk this thing's going to come back down maybe to $20 a share at some point once the enough supply of eggs enters the market and prices go down. I think this one could really be a loser. I don't want to be in the industry, not the industry I like to play in. Do I know how to run a farm? No. It's not a passion I have either. So I'll leave this one up to other investors to invest in. It's a pass. It's a sell for me. I wouldn't be buying Vital Farms, but I do like a good breakfast. I would say that much. I'm part of this demand for this product. So we talked a little earlier about PagSeguro. Let's talk about New Holdings. What's going on with New Holdings? It's up again. Way to pick yourself off the mat. These guys went into the ring with, and I would have used the analogy of Mike Tyson, but Mike Tyson's a little older now, and I'll have to update my analysis. But let's say they went up against one of the champions of the ultimate fighting, and they got knocked out, and they picked themselves up. They're like, hey, man, we're a good business. We're going to pick ourselves up. And this doesn't really show it that well, but it's been going up. So that's good. That's good. Year to date, still up 12%. Even though it fell off a cliff, it's still up. That's great. I'm making money on this stock. It's doing well. If you buy at the right times, you're going to do okay. If you buy at the wrong times, you might lose a few bucks. And this one here, I bought at the right time. And it's a business that I think is really executing well. If you look at, they added more customers, they grew, all the right things. Now, the foreign exchange rates that hit them, not their fault. And for all we know, they're going to benefit from it in the future. So I'm good buying into New Holdings. I'm a buyer of New Holdings. But I would say that as a U.S. investor, I need to hold that investment to a small amount just to manage risk. I like the business, but I will play it safe. Maybe about 2 years ago, I sold my StoneCo stock, and StoneCo was doing great. I mean, I bought it and it just took off like a rocket ship. And then I sold at a gain. And I'm glad I sold because it ended up collapsing. What's it been doing? Oh man, that doesn't look good, but it's been rising. Let's see what's going on with StoneCo. And StoneCo is a Fintech company down in Latin America. And let's see what they've been doing. So they've been growing. Look at that. They're growing 14%. Now, one of the things that had changed is they started to like really burn cash. So they were burning cash, they made cash, and then their cash flow started to drop. And now the trailing 12 months doesn't look all that great. What's going on with cash flow? Gross margins look great. So I have to study this guy, but I'm kind of liking what I'm seeing. I'm going to take a closer look at StoneCo. In the past, I'd been an investor. I got out of it. I'm glad I got out of it. And I got out of it in time. I made money. And this chart looks really awful, right? Now, if it can come back to like $60 a share, everybody will be happy, right? This is a multi-bagger. So what I'm going to do is I'm going to say that this one I'm going to do homework on because it might be a really neat opportunity. I like how they're growing and I like their margins. So I need to study their earnings kind of study where their business is at and see if I'm comfortable and confident that, hey, these guys are going to start growing. And they're going to raise their profit and raise their free cash flow. If they're growing at these rates and they have, expanding cash flow, expanding revenues, maybe I've got something here. So I'm going to do some homework on StoneCo. Somebody brought up symbol SYM. Symbotic. What does Symbotic do? Symbotic, an automation technology company, develops technologies to enhance operating efficiencies in modern warehouses. Company automates processing of pallets, cases, warehouses. Okay. And I know the warehouse is somewhere where robotics and things are already being used. Totally. I totally get that. And it's been something that in industry, they've been working on for 20 years, maybe 30, is robotics and automation. So these guys are 14.3 billion in market cap, revenues almost 2 billion. They lose a little money. Forward PE is 77. So they're growing really nicely. High growth, looks good. What's their stock been doing? So their stock really ran up, but it settled down. All right. Okay. Over the 1 year, sold off. They've been growing their business. Okay. Are they getting profitable? They're generating free cash. They do have gross margins. And as they get bigger, this is going to improve. But the margins are not very good. Looks like they're producing a product, like producing an automobile. They're probably producing these machines that are robots or that have a lot of technology in them. So profit margins are there. So this one's a pass for me. It's a sell. Just not enough profit, no cash involved. I cannot get anywhere near this valuation. I can get to like 2 billion maybe. So this one's a total pass for me. There's just too much risk. And the margins are terrible. So they can be incredibly successful, but their margins stink. So it's like, well, I'd rather buy a software business that margins are awesome. And if that business is successful, the market cap's going to fly up to 100 billion. These guys, I think the fact that they're in AI and automation is catching a lot of attention. But once you study the fundamentals and go, well, that's great that they can sell a lot, but they're not making a lot of money. It's a very low margin business. That's like lower than a grocery store. So no thanks. So that's Symbotic. All right, so let me catch up on comments. I think I've covered the stocks that people wanted to see. I have a list that I want to see, including Nvidia. But let me read the comments. We're 29 strong on the live stream. Thanks so much for making me a part of your morning. Talking about stocks. Getting ready to see what the big Nvidia show is gonna be. All right, so where am I at? We talked about PagSeguro, Symbotic, not buying Confluent. So First Solar is up 9%. We can go over First Solar. In fact, that's one that I wanted to look at. And I'll show you what I'm liking at First Solar. Oh, don't tell me Lantheus exploded to the upside. Come on, Mike. Don't tell me that. I sold all my shares. Oh, that's what I get for selling. Because it was just selling off like a dog, man. And now it's exploding to the upside. Now, it showed that, my analysis showed that they're discounted. The market was, my healthcare stocks were increasing in value, but the only one that was a dog was this one. I'm like, I don't get it. Why are they selling off? So I couldn't understand it, so I sold it off in my effort to create cash. And you know what? Every once in a while, I'm going to throw something away that had some value. I hope you're still in the stock. I think Lantheus, and I've never changed my tune on Their valuation is they're discounted by 38%. And that's with this increased stock price. So before this stock exploded, they were discounted by like 55%. But I just was trying to create cash, and it looks like I'm missing out on this upward ride. So hopefully you're taking the ride with Lantheus and making some money. Congratulations. Have a nice lunch today. Take yourself to somewhere nice. I'll have to go to Taco Bell because I wasn't in Lantheus, and I'll have to bring a coupon with me or something. All right. Forward P is only 12. Beautiful, man. God, this stock looks great on paper. Fundamentals look great. And their earnings came out and impressed. Now, when we started analyzing this company, we were analyzing the company, somewhere around here. And I think I started investing around here. So I did lose some money on my exit of Lantheus. I dollar cost averaged my exit, got out of it, still follow it. I'm happy for the company. I'm happy for investors. And that's just the game we're in, man. So you have to make decisions, and I'm going to keep making those decisions. Overall, I'm doing well this year. I'm making money. And some decisions will not be perfect. Here's an example. I don't have to be perfect to make a lot of money, and that's fine. So Lantheus is a buy. I sold because I wanted cash, and this thing was underperforming my other healthcare stocks. But now the market has seen their earnings and said, this thing's a buy. And I agree with them. So good luck with that. Thanks for bringing it up. You hurt my feelings, but I'm glad I got the information. All right. Omar, Zeta Global. Zeta Global. And then Tomas, we looked at Globant. And we talked about it a few weeks ago. And yeah, I remember it. Okay. And then Bernard, Atkore. So this one's an informed comment here. So Atkore is at $65 with around 300 million in free cash flow, PE of 6, market cap. Looks good. Yeah, I can check it out. So that's Atkore. Nicolas, what do I think about defense stocks? So, I started to think, I want to be in defense stocks, and then I changed my mind just because the margins are pretty low, and I got into LMT, and then they disappointed on earnings, and I'm like, I sold that, and I'm not in any defense stocks right now. I'm not excited about them because I think I could do better if I could just find the next meta, a couple of those that are like the winners, right? Warren Buffett, I'm going to try to paraphrase or maybe just repeat what he said. Is his statement was that winners will continue to blossom, and errors you can get past mistakes. And what he means is you have to find a couple, if preferably a good number, like 10, 15 stocks that are just absolute winning businesses for the next 10 to 20 years. And they will continue to deliver great returns, right? So you think about Meta, you think about Google Alphabet, you think about in financial services, like I had JP Morgan for a long time, and it just crushed it. I had United Healthcare for a long time, crushed it. I had TSM. I think I did great with TSM. And those were just great businesses. I got out of those businesses, buy low, sell high. And I can't imagine that in defense stocks. Can't do it. I'm like, man, these guys just kind of bounce around the bottom, and kind of they exist and they have a stable business. Well, the heck with that, man. I want to go find the next, killer freaking awesome stock that's going to blossom forever, as Warren Buffett would say it. Pedro Miguel, I appreciate the comment. Thanks, man. That means a lot. Appreciate it. Rotel and cheese. In the theme of CRM, Fresh is capturing market share. Man, I like that. Let's take a look. We'll go CRM versus FRSH. Then you put now. So yeah, I'm not a big fan of ServiceNow. I think it's overpriced. Okay, cool. Good one, man. I'll take a look at that. Yeah, I'm in United Therapeutics and I'm staying. Yep. But hopefully, Mike, you were in Lantheus and you're celebrating the day. You have a buy price of $315 on United Therapeutics. Cool. Yeah, I can understand that Walmart invested in Symbotics because they have massive warehouses, but Symbotics just has low margins. And, like if you want high growth with, like you look at automotive, they have growth, but they have very low margins and those businesses don't get valued very well. Tesla's the exception because Tesla is a popular stock. So that's my point is look at the margins. It's one thing to be right about a business trend. Like, hey, I think people are really going to like this particular product or service. But then you have to study the margins, right? If somebody's selling a $20 product and making 50 cents for each unit, you're like, wow, that's not a lot of profit. If another business is selling a product for $20 and they're making $18 of profit, you're like, that's a great business. You only had to spend $2 and you sold it for 20 and you kept 18. So I'm trying to find that business. I don't want to buy too many businesses that are selling something for $20, only making $1 or so. That's my point. So 520. I don't know what that is. Nice job, man. Drop the mic, Mike. No, I misspoke there, but congratulations. There's nothing wrong with Taco Bell if you don't have great I like where your head's at, man. Some of my favorite meals are very, very modest. And man, and I've eaten at nice restaurants. But I like comfort food. Like I like just being comfortable, hanging out with my wife and having a good meal. What's up? And Kiter coming into the picture. Intuit's a quality business. I just can never find the right buy price. They're always expensive. So trade Instacart. Well, let's take a look. Yeah, Intuit and Kiter. I don't know if you own Intuit. I don't think I've ever owned Intuit as an individual stock, but I've known of it. I've been a TurboTax user for 30 years. I was one of the original users of their product, and I know their other product is QuickBooks, really popular. It's a really successful business, but their growth rate isn't very high, and the premium you're paying on that darn stock is just a little too high. I find other better propositions in software, but all those stockholders that own Intuit, they've made money. So Maple Bear, I looked at Cart and I'm buying Cart stock because you look at, sometimes the market gets hung up on, they missed a little here and they missed a little there. But the big picture, these guys are growing. They're in a type of business that I really like, which is delivery of groceries. And I like that they have that focus. I think that DoorDash would like to come into their particular little niche, but I think DoorDash has specialization and expertise for food delivery. They do that great. And I don't know that they're going to nail it when it comes to the grocery delivery. The other thing I liked about their business was the model they have for grocery delivery. They're trying to switch it, and like they're doing health and beauty. So they have other retailers that are saying, hey, we want to have the service of that you guys provide for our type of business. Maybe they go to a Home Depot, maybe they go to a Lowe's. They do Costco already, but they kind of extend to that part of the market. I think that has a lot of organic growth. So I like that. The market's reacting to the negative. I'm probably going to buy shares today because I think the stock is well discounted. I did a video on it and released it yesterday. And my conclusion was really nicely discounted stock. Again, I like the industry. I like the business. And I would not be surprised if Instacart is acquired in the next 2 years. And if an acquisition happens, boom, 50% premium overnight. And that would be beautiful. So this is one that I am buying into and really believe in. That is Instacart. Nice. Cool. Okay, so let's get back to the list here. I want to go another 10 minutes, and I think I can finish the stocks that came up. So we just went over CART, so I handled that one. Zeta Global. And I got to hit Nvidia really, really quick, and I'll do that as we end the stream. So Zeta Global Holdings operates an omni-channel data-driven cloud platform that provides enterprises with consumer intelligence marketing automation software in the United States. Okay. Interesting. So it's done well, but it had to pull back. And it looks like it IPO'd maybe 3 years ago, maybe 4. It's a small cap, 4.4 billion. Revenue is 1 billion. So you're paying 4.4 times revenue. Forward P looks really good if they're growing. Strong buy. So good growth, $1 billion growing at 38%. Revenue is accelerating. That looks good. Okay. And margins are at 60%. Those can get better as they get bigger. That looks good, though. 60% looks good. Free cash flow margins of 10%, and they're a young business. Okay, so so they have $170 million of cash, and they are producing free cash flow. So I don't think they're going to run out of cash. They already have a cash balance, and they're loading up with more cash. Let me take a peek at their website. So one platform. So these guys do marketing, data management. Okay. That looks interesting. All right, cool. So this one's like right there on the valuation. It's looking like it's a little expensive. But if they keep growing, their cash is gonna. Let me look at the quarterly. See, the free cash flow for the trailing 12 months looks good. And it's expanding. Now, if I took the last quarter and multiplied times 4, we'd get to 140 million. And at their growth rate, maybe they're worth 5 billion, but it's pretty close, right? And it's a small company, excuse me. And they've pulled back, so that makes sense. This one here is really interesting. I think it's a homework item for me. It's not, I'm leaning towards it may be a buy, but it may not. I mean, it may just be kind of like on the cusp. It's a good watch stock. If they really improve over the next quarter or two, it could become a buy. So I don't want to buy too early and to be surprised and lose money. That's what I'm feeling about it. I like the business. I like the industry, right? They're a software infrastructure play, good margins. They're doing something that I think is of value. They're probably specializing in that whole messaging automation around marketing and stuff. So I like the business, but I got to figure out, are they going to execute fast enough to expand their cash flow, expand their profit? If they keep up that growth, that'd be great. So I'm going to do some homework on it. And maybe you'll see a video of them. I think it's a good idea. Thanks for bringing it up. And that's where I'm at. I'm not sure if it's a buy or a sell. I'm right in the middle. It begs more homework. I am interested in the industry. ATKR. So Atkore. So these guys Atkore engages in the manufacture of electrical, mechanical, safety, infrastructure products. Yeah, we looked at this stock a while back. They do so their products. They do this type of product, which is kind of an industrial. And the reason that they've caught, I think, some attention is they have part of their business services data centers. So I think part of that really led to, hey, these guys are part of the data center. Yes, but they don't make a lot of money. That's why the stock's down 57%. When we look at these guys from growth perspective, no growth. Okay, that's a problem. That's a big problem. And then when we look at margins, low margins, right? Okay, margins for industrial, but they're not great. They are profitable. Free cash flow is 10%. This is an industrial stock, right? Industrial. And they do electrical parts and products, which is great, but it's an industrial. It's not a high value stock. So this one here, low PE, that looks good. So cash flow. See what their debt looks like. So they have a little bit of debt, 636. So this business is worth about 2.5 billion. It's right there. So this is a meh, I don't like the industry. I'm not all that familiar with these guys. I get what they do. They're going to exist. They're going to be okay, but it's not going to double my money in the next 5 years. I don't think. It was really on a ride because I think it was getting mixed in with AI data center build out stocks. And now I think investors are realizing, wait, these guys are distributing electrical stuff, products that are a necessity, but they're not like, oh my God, it's like a GPU from Nvidia. It has a lot of value. No, it's not. So those are my comments there. And I appreciate that you're looking at fundamentals. It's very good. You got to match fundamentals with also qualitative, which is industry, and understand the business. Where are they playing? Are they truly a data center product company? And what part of the ecosystem are they a part of? Because not everybody's, really valuable. To use an analogy, right? In the data center, if you're a really skilled engineer in that data center, you're probably being paid a really good salary. But let's say you're a janitor and you're sweeping floors in the same data center, you're probably not making a lot of money. So make sure that the stock you're looking at is more of a high qualified engineer kind of stock versus the folks that you need to do janitorial services. So that would be the analogy I would leave you with. All right. So we're going to look at FRSH, and I'll have quick comments on CRM. Freshworks, software development company. Man, you guys are bringing it today. I've worked in software collectively for 30 years. I've never heard of this business. You guys have brought up a couple of names, that I've never heard of. I'm like, oh, this is cool. I'm learning. So Freshworks, a software development company, provides software as a service products, customer experience, employee experience. So this is a little bit like nice software that we talked about earlier. And okay. So this is help desk. This competes against like ServiceNow and Salesforce. So this is Freshworks. So they focus on small business. Okay. Got it. They're going to have a forward P of 32. That's very encouraging that it's small business. And these guys are 5.26 billion over the 1 year. Okay. This stock is not overly priced. They haven't caught any big rally or anything. All right. So when we look at their revenue growth, good revenue growth. I think I forgot what Nice Software had as revenue growth, but these guys are growing the revenue. I think Nice Software was growing a little bit better at a percentage rate, and his Nice Software was bigger. So these guys are growing nicely, but not incredibly. Look at those margins. Yeah, baby. 84%. That's what I'm talking about. And they are generating free cash. Very good. So this is an interesting business. These margins, the reason why software companies are so darn valuable is these margins. As they get bigger, this is really going to add up. But they're not growing really fast. This business is worth like $3 billion if they grow at the rate that they're growing. And they have $1 billion of cash. So maybe they're worth 4 billion, but they're a little overpriced right now. They need to grow faster. They're not that big, and their growth rate isn't fast enough. This is an industry where there's competition. Obviously, Salesforce is the big, giant 800-pound gorilla in the industry, and they're growing nearly this amount. So you got to grow fast if you're going to be this small, because you're not going to be relevant if you don't. And like Nice Software was growing, I think, better than that, and they have a bigger revenue number. So for now, I think Nice Software and CRM are better buys for me than Fresh. This is an interesting stock to keep an eye on, because if they accelerate their growth and maybe get back to like 50% growth, then I'd be like, hey, let's talk. Look at the quarterly really quick. Yeah, so it's consistent around 21%. So this one's a pass because I have other options that are better. CRM, I feel more comfortable with. And I am buying CRM software. I think it's discounted by 39% because their cash flows are just monster cash flows. Monstrous. Great value. You cannot ignore cash, man. Cash is what makes the value of a business. And CRM is just making cash happen. It's like their own mint. They're minting cash. Boom, 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 boom. And I really like that. So I've been buying into the stock, and they're going to announce after the earnings, and we'll see where it ends up. But I like CRM, and I like Nice Software. Thanks for asking about Fresh. I really appreciate the new idea around software. Your head's in the right game, man. If you find a couple good software companies to invest in, you will make a lot of money. Software has made some of the wealthiest people walking the face of the earth came out of the software industry. Bill Gates is probably the poster boy for it. And then other intellectual property like companies like Google Alphabet, Meta, and others have made gazillions of dollars. As investors, if we can find small businesses that are going to grow into the next Salesforce, we can make a lot of money and grow our wealth. So your head's in the right zone. Keep at it. So we're going to end with Nvidia. And I wanted to cover synopsis. We didn't have time. Oh, well. Save it for maybe I'm going to live stream tonight, guys. Nvidia's up. It's rallying into the close. And interesting. So now I would not be surprised if it ends in the red before market closes. This stock for a while hasn't done anything. The market is a little scared. Not sure. All the people that bought in at $130 a share are like, oh man, maybe I made a mistake. I bought it 6 months ago, hasn't done anything. And there's a lot of room for it to go down. But how much room is left for it to go up? It has to announce a perfect earnings. Perfect. And just come out of their shoes for next year. They have to come out of their shoes and say, we are going to do so great. Don't ignore DeepSeek. Ignore that Microsoft said they're going to stop spending so much on capex and start leasing stuff. You got to ignore all that stuff because we are going to deliver such great results next year and continue our awesome growth. We will see what they say. I would say that like last couple months, the Nvidia CEO hasn't been very public. I don't think he wanted to be public. I don't think he wanted to be asked questions. So, man, I got my popcorn ready to put in the microwave. Pop me a nice bowl of popcorn, and I'm going to watch the show, the Nvidia earnings announcement show. It's going to be an awesome show. We'll see where this thing goes. Man, stock investing is so fun. I started talking about Nvidia always in a respectful way. I think Nvidia is awesome. But I started to really question, guys, I think this thing's overpriced. I started shorting stock. And I guess I wasn't crazy. It hasn't done anything. For all I know, it goes up to $200 a share in the next 6 months. We'll see. But I think the chances are that it can go down. The chances are higher that it's going to go down. And my valuation on Nvidia, and I'm going to post this on X, is I think the stock is worth $84.35 per share. That's my price target. And it's because of this cash flow. There's the valuation of a 3.2 trillion valuation. You have to generate cash at very high amounts. And I think they're going to slow down their cash flow because this is a cyclical industry. And they will be worth a lot. They're worth 1.5 trillion, which is a massive amount, but it's not 3.2. So that's where we're at there. That's where I'm at, I should say. And we will watch it later. Guys, you guys are awesome. We're 30 strong on the live stream. I apologize that I couldn't get to all maybe the symbols that are out there. I really appreciate you joining. Let me just say goodbye to a few people who joined a little late. So Jao Rocha, thanks for joining. Sorry I can't cover GMAB. I've got to roll. I've got to have a quick breakfast and then get to my trades and do some other stuff. And then Hyper Wizard, good to see you, man. But I can't look at Wix. Sorry. App Lovin', man. Is that an interesting stock, huh? Turk, thanks for joining. I'm sorry I can't cover it, but I have provided comments on my channel around App Lovin'. That's an overpriced stock, and it really caught a rally, but it's really selling off. And 1796 card rips. Sorry I can't cover it, RIBT, but if you guys joined the late stream today, if you joined a little early and you put I covered about 20 stocks on this stream, and I got to end at some point. And so I apologize I couldn't cover yours, but just keep that in context. If you join the next stream early and you put your symbol up there, I'll cover it. If you're a member, a paid member, as I hope everybody can understand, I will cover your stock, quickly because you're a paid member and I want to show my appreciation towards you. Carlos, good to see you, man. Good to see you. You're a regular. Appreciate it. Mike, thank you, sir. Sergio, see you later, Sergio. DevQ, ciao. Thank you, man. Tomas, thank you. Thank you for joining. And Sergio, I'm sure that's something super cool in Portuguese. And you'll have to teach me Portuguese, man. Rotel and cheese. No, you're awesome, brother. Thanks for joining. All right, guys. Awesome stream. Good luck out there. And I will stream late tonight. I'll put it up on my channel so you guys know where it's at. And I really appreciate you. Take care.